If the Fed cut, would the Dow be up 5 to 10,000 points more?
I think current levels will hold. I think the market's still anticipating the cut, so I don't know if it's going to go that high. But we do think that the Fed's going to move twice in July and in September because the concerns on business sentiment are still lingering. Looking at the second quarter data and even for what we see for the third quarter, we still have some lingering concerns on CapEx and on business sentiment.
Why specifically do you think the Fed's going to cut? And later this month, how much would it cut?
We see 25 basis points in July and in September. And I think we see two factors at work. While we've seen good jobs data, we've seen consumer confidence holding in, we've seen CapEx and business sentiment not keeping pace with that. And we've also seen more uncertainty around other parts of the globe. So it's not just the Fed. In total, we think that 19 central banks are going to be easing in the second half of the year.
That definitely puts it into perspective there from a global standpoint. Savita, do you agree?
Yeah, I think that if we do see a 25 basis point cut in July, it'll be kind of an insurance cut. And I think that, Joyce is right. We haven't really seen the economic forces keep up with where we really should be in the economy. So what worries me a little bit is that, when you look at things like CapEx guidance coming from U.S. companies, they've actually become very, very reticent to put plans in place, whether that's because of trade risks or, other factors, is up for grabs. But we do see trends in the economy that aren't necessarily consistent with an environment where the Fed would be able to stay on hold or even hike rates later this year. So I think, it's reasonable to expect 2 cuts this year. I think the one thing that made me feel better about the data that we got last week was that, if you look at the labor participation rate, it actually increased a little bit. So wages decreased, which I think is a positive for U.S. corporates at a margin level. So I think one of the big for U.S. companies is that wage pressure has been increasing and companies haven't necessarily been able to price their products to keep up with that wage pressure. And what we saw last week was that wage pressure is actually kind of stalling out a little bit as more and more people come to the market. So labor participation could actually be a boon to U.S. corporates.
Your point about CapEx, you've been on this for a long time, and it's finally actually coming to the fore. But from an optics standpoint, stock market at record highs, robust job market, and a president jawboning. How do you cut in the face of that? In the face of all that?
Well, I still think that the biggest downside risk is from the trade uncertainty, and we've gotten a reprieve, with the temporary truce, but we need to see how those negotiations go. You also have auto tariffs in Europe that are going to be in focus. So the business sentiment, the global capex, the future investment, all of these things, are still very dependent on planning ahead, and that's why I agree with Savita. An insurance cut makes sense here, and I think the Fed has very clearly signaled that as well. So we're going to be watching the data very closely in the third quarter to see if we have more of a follow-through, from this. But we're getting concerned that in other parts of the globe, there's still quite a lot of uncertainty that lingers as well.